two more subscribers.
Good morning and welcome to Mark Putrino's Trading Research. New intro today, folks. And I want to give a shout out to Stone Bone of St. Petersburg, Florida, for giving me that song to use the intro to. Thank you very much, boys. Good morning, everybody. Hope you guys had the most merriest of Christmases. Mark, how are you today, bud?
I'm pretty good. How's it going?
Yeah, excellent.
Let's just looking here. My new favorite subject is government UFO cover-ups. So, saw this pretty interesting article here. At least I think I did.
You can find them on YouTube too if you want to watch them. They're older like us, Steve, so you'll like it.
I don't know, man. It sounds a little too heavy for me.
All right, we'll find something a little softer.
Where the hell is it anyway? The, putting one of these representatives is saying that we have aliens. I don't know if I believe that or not, but I don't know. I guess I was there before, and I can't find it.
Over Christmas, Santa Claus had brought us a new guest to Stock Market Jobber, and he was named by Steve Barrett there in the chat. Introducing Barry Garcia to the stockmarketjobber.com. Hope you guys enjoy him. We're going to use him in different ways, give him a personality eventually, but there's our bear.
Let's see. Video shows US UFO hovering over Air Force One. Oh, let's check this out. UFO video shows UFO hovering over Air Force One. Wow.
Amazing how they beautified the bottom of the plane now where he comes out of.
I know. What a friggin'. It's like if you can't climb up a flight of stairs, maybe you shouldn't, you know. Oh, yeah, look at that. It's okay. UFO caught on camera. So I guess that's the UFO there. Let's see. The unclassified report said 163 sightings were balloons, 26 reports were unmanned aircraft, 6 were birds, plastic bags, or the result of weather events. All right, well, I don't know. What do you all think? UFO or not? All right, anyway, I'm checking out oil here, right? And I think looks like we could have a little bit of a breakout here. Now, as we know, some price levels just happen to be more important than others. And for whatever reason, for oil, 74 happens to be important. And see, it was resistance back here, right? So you got people who sold back here. When the price went lower, they're like, this is easy. This is great. But then the price goes higher, and a lot of them say, man, I made a mistake. If I can buy my oil back at the same price I sold it, I'm going to. So you get these remorseful sellers going to buy their contracts back, and that if there's enough, it becomes support, like it did here and here. And then here we have the opposite, where support can come into resistance or turn into resistance. You got people that bought back here who, once they get underwater, are like, I want to sell. If I get out at break even, I'm going to. So if you get remorseful buyers placing sell orders where there was support, if there's enough of these sell orders, the support can convert into resistance, and that's what happened here. Now, when we have this big move up on Friday, or actually, no, my days are confused now. What is today? Wednesday. So we had this big move up here yesterday. It tells us that the sellers that created this resistance are out of the way now. So I don't see anything that looks like there's going to be a clear amount of resistance in between here and up around this level up here, 78, 60-ish. See how it was support, then it became resistance. So for whatever reason, oil happens to really like this level, and it really likes this level. It doesn't really seem to like these levels that are in between. So how would you play that if you're not an oil trader? Well, you could look at this USO ETF, which is designed to track oil. USO, the United States Oil Fund. It doesn't do it perfectly, but it does, for our intents and purposes, a good enough job. So this is trading right around 70.20. Actually, no, it's down in the pre-market. So say 69.5. So if oil keeps moving ahead, this could probably get up to around 73 and a half or so. It could have like $3 in it. And then you could always go into the energy sector. This is the energy sector ETF, XLE. And as you can see, this kind of follows oil as well. It's broader because it has other energy in it. It's like natural gas and so forth. But as you can see, it pretty much tracks oil. So this would be a way you can get exposure to it. You could also look at some of the stocks that are within this sector. Well, that's pretty wild, man. I wonder if that really is a UFO. I don't know why
Hopefully
they
they
would
were
be following his
downloading
plane, though.
something good into him.
What's that? Yeah.
Hopefully they were downloading something good into him. Get him right again.
I don't know, man. People will say, like, oh, Biden's too old. It's like, listen, man, this guy was dumb even before he was old,
Yeah,
right?
I just think he's always been crooked, and he's always been in a system that allowed him to be who he was, and it's the system's what's broken. But Jack's Miami's defense is nasty. Everybody talks about the offense, but we've got a good defense, and defense wins championships. So watch us for Vegas. Now I'm gonna be there too, so I'll shoot it from Vegas.
Are you really?
Oh, we going already. We already got the hotel room, the tickets. We're ready. We're set.
What if they don't make it?
It doesn't matter. We're gonna be Dolphins up and get in Vegas.
All right. All right. All right. So, anyway, you can look in the energy sector here. See all these names here? These are all, well, maybe not all of them, but these are going to follow oil pretty much. So, ExxonMobil could be a place to go. Oh, you know what? I saw, yeah, you see how they all kind of look the same? I saw Ed Yardini, who's actually pretty smart guy, was saying why the market is going to move ahead here. So let's see what he has to say.
Hey, Mark, we got a question from our new viewer, Ben. Good morning, Ben, and welcome to our channel.
Um, let's see here. Let's see, 440 and 434. Well, I mean that would be a pretty big sell-off to get all the way back down to there. Let's see how much that would be. Say to 440. I mean, I'm not saying it won't happen. That's about 7%. Well, I would be looking at this level first here. If we get some kind of a pullback, there's good chance we could find some support around this 460 level, because you see how it was resistance back here last March, and then it became resistance again. So I would say that that's probably going to be our first stop if we start to move lower around 460. Then the next stop, I would probably, yeah, see, I agree with the 440, because you see how it's like right here before we kind of gapped up here. So that's going to be an important level. So I would say 460 would probably be the first stop. Then I would probably look here for your second stop, which would be around 447. And see, all I'm doing here is just picking levels that had been highs and lows. So if we think about the dynamics, there's going to be people who sold here. They figured, oh, the market's gapping up. This is going to be a perfect place for me to sell. So I'm going to sell, but then the market goes higher, and a lot of them are like, I made a mistake. I'm going to buy my shares back if I can. So they wait for it to come back. So I would say that certain levels are more important than others, right? It's just a given for markets. It's self-evident. So I would be looking at these. So yeah, I would agree with you. 440 is probably going to have some importance, and I would agree with you. Yeah, and the 434 level would probably have some importance. But before we get there, I mean, we're going to have to see, right? If the market comes in and it looks like it's going to hold, then it's probably time to get involved here. If it looks like it's not going to hold, then we see what happens when it gets to the next step. If it looks like it's going to hold, then we get in. If not, then we just wait for it to go lower. So I would concur that, yeah, these are probably going to be some support at around 440 and 434. But we got to look at these levels up here first, though. Yeah, so anyway, so what's going on today? Pretty much nothing. 475. We're trading right at the top of this range. So let's see what Yardini has to say here. All right, so interest rates are back to normal. I don't know about that, but I would say they're getting there. Interest rates, the government shoots for about 2%. So he's saying the Fed might lower rates twice instead of four times or more as widely as anticipated. I don't see that.
Well, that just throws a ton of uncertainty in the market. Well, we may go two, we may go four, we may not. You know, and that's just, I don't know.
Yeah.
Makes people skittish.
Well, this guy, Mike Wilson from Morgan Stanley, he's like the perennial bear. The roaring 20 scenario, not only possible, but probable. So he's saying we get to 5,400 in 2024. That would be a fairly big move higher. But let's see what he has to say here. You know, I think the main bearish thing now is just the overwhelmingly positive sentiment. And this kind of plays right into that. Consumers have purchasing power. Okay, you know, I did some Christmas shopping. The stores seem like they're pretty busy. My little anecdotal evidence. Households are wealthy and liquid. The net worth of American household is staggering 151 trillion. All right. Demand for labor is strong. Okay, I guess that's true. Onshore boom is boosting capital spending. American and foreign manufacturing companies are onshoring to the U.S. supply chain disruptions. So yeah, I mean, I think that's a good idea, right?
Man, that's one of the major points we need to have in this country is to start taking care of more of our own stuff.
Yeah. Housing is all set for a recovery. So the plunge in interest rates will boost new and existing home sales. Corporate cash flow is at a record high.
Mark,
Inflation is turning out to be transitory, which is really just a play on words because all inflation is transitory.
Listen, since where I am now in Melbourne, the homes they went up about 150,000 after 2020 when COVID hit. So there's no way that the prices come back to normal. The prices have got to come down before it ever gets back to normal.
Let's see. The roaring 20s will broaden the bull market. Fed Chair Jerome Powell and his colleagues have pivoted towards the soft landing scenario, which is known as immaculate disinflation. I don't know, man. I mean, I know Ed Ardini was a smart guy and he's got a good track record, but I guess he gets paid for his opinions. But as traders, it's having an opinion is kind of a dangerous thing because we don't want to get like married to an idea because it could alter the way that we think. So, you know, it's fun to talk about the market could do this, the market could do that. But if you're a short-term trader, it's best to kind of not really worry about it. Like every day is a new day, and let's just talk about what's going to happen today.
Yes.
And as of right now, with the S&P, it doesn't really look like it's going to do much of anything. But we'll look at some of the other sectors first. But I want to just see what is going here. How 2024 could turn into a trader's market. So this would be the exact opposite of what Ardini was just saying. Ardini was saying that market's going to go up. When they say it's a trader's market, that generally refers to like a market that's kind of flat, that you got to pick your places. So let's see here. There's no better time to start thinking about your game plan, blah, 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 blah. Jeffrey Sout, chief investment strategist at Sout Strategy, which not familiar with him. All right. In a note to clients, Sout observed Wall Street's tight range of outlooks for the S&P's 4,500 to 5,400. All right, so there's Mike Wilson. He's the perennial bear. Morgan Stanley. So he's looking at earnings. Now, if you go back in history and you look at the average price to earnings ratio, that's what these people are basing this on. So it's not like they're just pulling numbers out of a hat. What he's saying is, all right, well, we estimate that we're going to earn this amount per share, okay, for the S&P. If that's compared to historical norms, all right, yeah, so 20 times price earnings ratio. I guess that's pretty historical if you go back 100 years or so. So basically they're just saying, all right, well, if these earnings are this and we're within a historical average, what would be our price? So these guys are saying 4,500, which basically means that we're going down because we're about 47.5. So our Ardini is estimating that they're going to earn 250 earnings, which would give us a price target of around 5,000. So he says 5,400, meaning that they think the PEs are going to get better. So they're really just comparing things here to historical norms. I mean, who is right about how much they're going to earn and so forth and so on, that we don't know. But that's all they're really doing here. We're saying, all right, well, if we earn this and we're based on a historical average of, say, 20, a P of 20, then the S&P will be here. All right, let's see what else here. Trying to guess an S&P range for the coming year is a waste of time. Yeah, I mean, I think I kind of agree with that based on what we were talking about. If it becomes a trader's market, the strategies of buying large cap dividend paying stocks and writing options against them would be a winning strategy. So basically, what he's saying is that if the market's not going to go up, you can write options, in other words, sell covered calls. So if you own a stock, and say you own a stock and you don't think it's going to go up, you don't think it's going to go down, but you don't think it's going to go up. If you thought it was going to go down, you would probably sell it. So just say you think it's going to be neutral and for whatever reason you don't want to sell it. Well, you can go sell calls on your stock, and that's called a covered call. Now, a call goes up in value if the price of the underlying goes up in value. Calls also have a value because they're a contract, and the farther out you go into the future, the more you're paying for the right to have that contract extend into the future. So just say theoretically you have a stock that's $10 a share. There might be a call out in 6 months that has a strike price of say 15 that might be selling for $2. So if you sell that call, you get to keep that, you get the $2 into your account. Now if the stock doesn't move, eventually that call will expire worthless and you keep that money. The risk is that if say the stock does go up to say 20, well, because you sold a call with a 15 strike price, you're going to be required to deliver the shares at 15. So you miss that upside. So that's why selling covered calls is what we call a neutral strategy. If you think the market's going to go higher, you're not going to sell. If you think the market's going to go lower, you would just sell your stock. If you think it's not going to move, then you consider covered calls. And I know some of our students have been pretty successful with selling covered calls right when things get to resistance, thinking that they're going to back off. So stock gets to resistance, maybe it backs off a little bit. So that's where you might want to think about selling some covered calls. But that's what this person is speaking about here. Now, I always kind of find it kind of strange when they use these charts here, because this is stockcharts.com. And personally, I don't like these charts, and these are free. See, you know, the reason why I don't like them is you see how it goes all the way to the edge there? You can't, like, get any space.
Yeah.
Like I can here. But, like, why would someone who's, like, some big shot be using this? This is something that's free and pretty weak, in my opinion, versus having, like, a Bloomberg or even a trading view like I have. All right, so let's see what here. Risk gauge. Da, 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 da. All right, I don't know if he's really saying much there. All right, so let's see. First, let's just check out Apple, because I've been a little out of the loop with Christmas, so forth. Oh, look at that. So Apple is kind of starting to trend a little bit lower here. Now, Apple's the biggest stock in the market, so obviously it's important to watch, but notice how it got up to this resistance, at this former resistance level, and now we're trending lower. So we have resistance at former peaks a lot of times because you get people who bought up here, and then the price goes lower, and a lot of them are like, you know, this sucks, man. I shouldn't have bought. If it gets back up to my price and I get out of break even, I'm going to sell. So if you have enough remorseful buyers selling at the level that had been resistance, it can become resistance again. This is why we tend to run into resistance at former peaks. It's not a astrology or science fiction. It's based on psychology. Now, a lot of times when we get to resistance, we tend to sell off. Why is that? Well, resistance is this price level where there's a lot of sell interest around out there. So you get a lot of sellers. A lot of people are interested in selling. And they notice, hey, you know, the price isn't going up here anymore. That must mean there's new sellers coming into the market. So sometimes they start to get a little anxious that they're going to miss out. And then they start to undercut each other. And you get the snowball effect. So a lot of times you get to resistance, you tend to sell off. They don't tend to stay there and go sideways for an extended amount of time. So Apple clearly has formed a new downtrend here. So we're going to go put this in over here. And this morning, pretty much unchanged. But this is something to take note of here, because this is underlying weakness in the market, right? So maybe the real big companies now are kind of starting to head south, and it's the little guys that have been propping up the broader benchmarks. But that could come apart pretty quickly. And we'll tell you something we can look at here. So let's see Microsoft. So Microsoft has kind of just been going sideways. If we look at the Qs, this is the micro cap weighted. I'm sorry, market cap weighted. So this is kind of moving higher here. All right, so let's look at that. And then we can look at this ETF, which is the Qs where everyone has the same weight. And let's see what's going on there. All right, so they're looking pretty in parity. Sometimes this one starts to fall apart before the regular Qs because, and it's not happening now as we just saw with Apple, but theoretically because of the market weighting, this is 100 stocks, like 80 of them could be going down. And if that money's going into, say, the top 3 or 4, that could pull the broader benchmark higher. But at the same time, it's masking some of the underlying weakness that's occurring. All right, so Apple looks kind of weak. I guess we can just take a look at NVIDIA here for the hell of it. And that's really kind of done nothing as well. And it's underneath this important $500 level. So this is a good example here. If we get to resistance, we tend to sell off. And then on the other side of that, when we get to support, we tend to rally. And this is the opposite. What's a support level? Well, a level where there's a lot of buy interest. And some of the traders notice, hey, the price isn't going any lower. That must mean there's new buyers coming in. I don't want to miss out, so I'm going to increase the price that I'm willing to pay. Other traders say, oh, that guy's moving higher. I'm going to get in front of him. And it starts a bidding war. And that's why you bounce off of support. It's not because of whatever they're telling you on CNBC or on Bloomberg News. It's because of the psychology. 95% of the time when something's moving, it's just because of short-term psychology. It's not because of whatever it is that they're telling you. As a matter of fact, I saw a headline this morning, going back to oil. It's like oil up on Red Sea something or another.
Yeah.
Which I don't even know what's going on in the Red Sea. But, I mean, well, first of all, oil is actually down. But, I mean, if you just look at this chart, is this just trading or is there some kind of major macro political event going on? If you didn't have the news, you wouldn't know that there's something big going on. Like what was going on here? This was a bigger move. These were bigger moves. So the media just needs to stick a reason on there. They're not going to say, oh, oil's rallying because traders are getting anxious and they're outbidding each other. They're going to say, oh, oil's rallying because of something going on in the Red Sea. It just sounds a lot more sexy and enticing. All right, so what's healthcare doing? Here's our healthcare sector. All right, and this guy is kind of beneath important resistance as well here, right? So second, actually, you know what? This is now the third biggest sector. The financials have surpassed. For years, the healthcare was the biggest sector, but now the financials are the second biggest. We could go take a look at that. If we look at the S&P 500 fact sheet here, holdings, sectors. Yeah, see this? So financials have pushed ahead. So financials is now 12.9%. Healthcare is 12.5%. For years, healthcare was around, say, 15, and financials were around 12. But we've had this change here. And speaking of financials, I think that different sectors are in the driver's seat at different times. And right now, I think it's the financials. If this ETF here, well, this ETF is designed to track the sector, but if this thing kind of rolls over and this support around 37 breaks, you see how it was a resistance level and then it turns into support? See, like down here, resistance can become support. You just got to kind of drill that into your mind that certain price levels are more important than others. It might sound a little simple, but that's just how it is. And that's how that's an important thing for a trader to know is where are these important price levels. Because when markets get to them, that's when trading opportunities abound. For example, we get to resistance and we sell off. We get to support and we rally. We want markets that are going to move. And if there's no news out, the only thing that's really going to move something is the short-term technicals. How does it react when it gets to support? How does it react when it gets to resistance? If something is neutral and it's in the middle of a trading range and there's no news coming out, like as traders, we want to move on to something else. We want things that look like they're going to move imminently. And to me, imminent means in a few days or maybe a week or so. So if this support gives out here, then there's a chance we get a good move lower, and I think that will bring the broader market lower. But as for now, we're holding. So where are we going to possibly get some insight as to what's going to go on here? Well, we can look over in the bond market, and we could see this bond ETF, which we follow, has gotten up to this level where it was support. Remember, support can become resistance. That's because there's people who bought back here who regret their decision when the price goes lower, and they tell themselves, if this gets back to my level, I'm going to get out at break even. So if you have enough remorseful buyers placing sell orders at the level that had been support, it turns into resistance. Now, if we get that phenomena that I had mentioned, and it's too soon to know yet if it's going to happen, but it could, but it might not. So that's why we got to wait. And right now we're kind of on the sidelines. If some of the sellers start to freak out, thinking that they're going to get undercut, well, they're going to reduce their prices, and we could get this like snowball effect. And this would push interest rates higher. So this would be a catalyst for the market to go lower. The way people are so bullish right now, what it tells us in a lot of ways is that think about it this way, right? If the vast majority of investors are bullish, what do? They spend their money, they invest their funds, and eventually the market runs out of buyers. And then the only way it can go is down. And that's kind of where we are now. And if there's some kind of a catalyst, like something goes haywire over there in the Middle East, or we get a big move up in interest rates, as sellers come into the market, they're going to have a tough time, in my opinion, finding buyers. And they're going to have to push the prices lower. So we get some kind of a negative catalyst. I think we're set. These are the type of markets that go down big, right? When everyone's giddy and everyone's happy and everyone thinks like, oh, the Magnificent Seven, this, and it's very similar to, not that I remember, but I know my Wall Street history. The Nifty 50 was the big bubble back in the late 60s. The Nifty 50. Right now we have the Magnificent Seven. And think about this. NVIDIA reported these blowout earnings and the stock didn't move. It actually ended up going down. So that was an example of bad action. Blowout earnings and we don't move, right? Bad action. Because if there's blowout earnings, we should be going up. But if everyone on the street who wants a position in NVIDIA has already taken it, doesn't matter what the earnings are. Because if you have a full position, if you're an institutional portfolio manager and you say, I want a 3% position in NVIDIA, and you get a 3% position, regardless of what the earnings are, you're full. You don't want to buy anymore. Your position is maxed out in that particular stock. So that's kind of, I think, where we're getting right now. If we look at these AAII numbers, these are this, what is this called here? An association. So this association asks their members, are you bullish, bearish, or neutral? And this is the highest reading in a year. 53% is actually pretty high. If we go back over the year here, well, actually back to August. Yeah, I mean this is the highest it's been in at least a year. So again, excessive bullishness. What happens? People spend their money. Then what happens? The market runs out of money or runs out of buyers. Maybe it kind of hangs out, but if there's some kind of catalyst that brings sellers into the market, it's going to, we're set up for a market that could go lower now. This is when markets crash, when people are really euphoric, right? If people are bearish, people are worried, it doesn't happen. There's an old expression, the market climbs a wall of worry. When people are really giddy and everyone's invested, because again, it just comes down to basic supply and demand. If the demand is full, if the demand is like, say, satiated, and people that want to buy have their positions and they're not willing to buy anymore, that's when we make a big move lower. Let's see here. So, I don't want to I mean, I hope the market goes up, but if you if you really get married to an opinion, that can make you subject to confirmation bias. So I mean, so XLK, this is our tech sector, like creeping ahead here. So I mean, that looks pretty good. Losing out some of that overbought condition. But I think it's if there's two things to pay attention to, it's what goes on there with the bonds and what goes on in the financial sector. And yeah, I mean this is our biotech. This to me looks like we could get some kind of a reversal here because you see how we're getting close to this former resistance level, and as we know, there tends to be resistance at levels that have been resistance before, and we're overbought. So overbought means we're trading above what would be its typical or historical range. And that draws sellers into the market because they're going to be anticipating a reversion. And a lot of strategies are built on this concept of reversion to the mean. So overbought at resistance, really kind of stretched out here. So I don't know. I mean, I would probably be trading up again this morning. So we're pretty much right on this line. Pretty amazing, right? Right on that line. So this is last June. So I would expect us to kind of stall out there. I think it's in the going back to the financial sector, it's really the banks that were pulling things higher. Here's J.P. Morgan. Some of the other companies or other industries, I should say, were not looking as strong as the banks. We could look at this bank ETF, but as we can see, if I bring this up here, we're kind of going sideways now. But you see this big move here in the banks?
Mm-hmm.
So this was really where all the strength in the financials was. If we look at some of the other big guys, like, for instance, Berkshire Hathaway, the action here has been kind of neutral, and this is the biggest stock in the financial sector. So it was really the banks that I think drove the banking industry drove the financial sector higher, but now that banking industry is starting to kind of cool off. So those are just certain things to look at here. So comes down to the financials, and then within the financials, we want to look at the banks. So it's really the same place we've been for the last 2 weeks or so. I mean, it's with the Christmas holiday and so forth. Maybe things have slowed down a little bit. But let's look at our communication services sector, and this is a good example of what I was just talking about. See, look at this reversal, right? And where did we find? And I know some of our listeners were in on this. But anyway, we break out, we reverse. Where do we find support? Precisely at the level that was resistance. Then what happens? Well, a lot of times when we get to support, we get the bidding war starts. Buyers don't want to miss out, and that pushes us into an uptrend. It causes a snowball effect. So resistance converted into support, and we rally off of support. These are all just your basic market dynamics. There's nothing to do with the news or what they're saying on CNBC. And CNBC, man, they really got to get some new blood over there. I mean, they've had these same people on for years. Joe Kernan.
A lot of that legacy media is going to go away, Mark.
It's just they need some new blood, man. It's like, how many times can you hear Kramer yell at you? You know? It's like, dude.
Yeah, well, I mean, on the financial side, but on the other side, I mean, the lies and just straight lies and propaganda is ridiculous in the mainstream media. You don't even watch it anymore.
Yeah, I know. They've really just. I mean, who watches it? I mean, they've really
might as well just be an agency of the government at this point.
Exactly. You know, you got what's his face there, George Stephanopoulos. I mean, he worked in the Clinton campaign, right?
And now he's on whatever Bill tells him to do.
So how's he supposed to? And then he gets upset because he was upset when Bill Clinton, was fooling around with Monica Lewinsky. So it's like, all right, dude. So you're basically the only person in the country that doesn't think that this guy is screwing around, and yet we're supposed to trust your opinion. I mean, it's like
Or he's
I
in
don't
love
know.
with Hillary, and think about that.
And now they're like saying, oh, oh, there's no proof to tie Joe Biden to this. Oh, okay, well, that's why his address is on four of the suspicious activity reports, right?
Listen,
That's
he's
what.
cooked, man. He's done. That's what I'm saying. I mean, it's just a matter of time. I mean, you even got Joe Manchin coming out in the middle of an election saying he's fixing to run for president. That's ridiculous.
Yeah, well, this is, this guy could have just retired and went off into the good night, but he knew, oh, it's my turn. I got all this stuff in my background. I tell this to my Democratic friends, man. It's like, look, dude, sometimes things are self evident. One of the first things he did when he became president was he changed the rules so Congress couldn't access suspicious activity reports in the banking industry. Why? What benefit is there to the country when Congress can't access suspicious activity reports? Then we find out that there's 177 suspicious activity reports tied to his accounts. It's like you don't need to be Sherlock Holmes to put that together and make that connection.
Well, Mark, just think about all the legal challenges and everything that was made against that Title 42 that was designed to keep our border secure. That was a simple, simple thing. And they made sure they did their damnedest to get rid of it so that we could have this giant influx. And I don't know if you've watched TV lately, but good Lord, the amount of people coming towards Texas. That's
Oh yeah, dude,
insane.
it's up here in New York City. It's like a friggin' migrant crisis. There's homeless people everywhere. It's really sad.
Yeah, you lost New York City, I believe.
Let's see. New York Times sues Microsoft and OpenAI, alleging copyright infringement. Joe Lieberman draws. He actually lives right down the street from me. Eric Joe Lieberman. I've never seen him or anything, but I know which building he lives in. Let's see. New York Times sues Microsoft and OpenAI.
This is scary, Mark. Imagine if they started getting AI so good that they can start producing the news with it, and you don't know who you're looking at or who's talking to you. That's crazy.
Yeah, I mean it's almost the way now, right?
Yeah.
You don't really know. Like that. There was that South Park where they have a big like, what's a real ad and what's like a fake ad. Let's see here. Tech companies building generative AI tools have generally argued that content available on the open internet can be used to train their technologies under a legal position called fair use. So I guess this thing goes out there and I guess it plagiarizes it. My prediction is that there's going to be some legal stuff that I think it's already happened where some of these attorneys use this like AI to write their opinions or their like legal documents or whatever, and then they make mistakes. I think it happened in New Jersey where some lawyer got in trouble, but it just seems like so it's just such a symbol of the laziness of our culture. It's like my daughter was telling me that she's in a group with one of her classes down in college, and like one of the kids like didn't do any work, and they clearly used this like AI thing to write their part of the assignment because there was all this like misspellings and this that and the other thing, and it's just I mean, whatever happened to like the joy of learning something as opposed to just doing as little bit as you can to get by. But then look, I mean, we got the friggin' president of Harvard, which is supposed to be a prestigious university, is like all these people now are coming out and saying, she plagiarized from them, right?
And how does she walk all the way up that ladder while she's plagiarizing and nobody says anything about it? Is it because of the woke culture that we've been? Is it that we
Absolutely,
need to
man.
awake in this country instead
There's
of being
absolutely,
woke?
there's no doubt about it. Even Alan Dershowitz said that, and he's certainly no conservative.
No, not at
But
all.
it's like it's like let's fight racism with racism. It's like if you want to end racism, stop talking about race. I mean, that's the way I look at it. And instead of doing all this garbage, how about you talk about genetics? Oh, genetics. Oh, gee, we all came from the same ancestors. Oh, okay. Well, we're different because your ancestors left Africa at a different time than my ancestors left Africa. If people talked about genetics, then it's like you wouldn't worry about all this like soft pop culture stuff. At least in my opinion, there's two tribes. I like reading about genetics actually. There's these two tribes in Africa that are across a river from each other, And they are more genetically diverse than I am with people in either one of those tribes. I mean, if you really think about that, it's like we're what 99.999 like the same DNA.
Right.
And I saw that cats have 80% of the same DNA that people do. But anyway, if they just taught like real science, I think our country would be in a much better place. But I
Well,
don't
they
know if
need
that's
to
going to
teach
happen.
civic education as well, and they need to understand who veterans are and what they did, not just the guy that Why do we stand up and clap for these people? They need to understand civics and what America's about, and we're not teaching that anymore.
Nah.
We've got I don't know 15 years of stupidity that's been taught to these children, and there's a whole generation that's messed up about it.
So look at this, man. I guess they're snatching Americans all over the world because I guess they know that will pay them off. So I'm gonna have to read this later. How snatching of American citizens turned into a tool of hostile governments. So that guy's in Venezuela, Syria, Iran. I mean, I don't know. I would
What you
like
doing in
never go to
Iran?
Iran on my own.
No.
This guy's in Iran, Venezuela. Boy, Venezuela. It looks like Venezuela and Iran are kind of leading the pack here.
And imagine that, Mark. Now we're buying that dirty oil from Venezuela so that we can refine it all here, and they're snatching our people. And we just made a big hostage deal with them for something crazy the other day.
Yeah. All right. So Modelo is now the most popular beer in the country, past Bud Light. I think Bud Light is disgusting. But let's take a look at Bud. Bud. Stocks. Anheuser-Busch. Huh. Now, this is doing pretty well. See, we got a little bit of another trading lesson, right? Here's our little descending triangle type pattern. So if you think about these patterns, it's kind of easy to understand why they make sense. It's not just like tea leaves or astrology. Unfortunately, the way a lot of people look at charts, it is tea leaves and astrology because they don't know what they're doing. But what this shows us is that the buyers are hanging out down at the support level. But as time is going by, the sellers are getting more aggressive. In other words, they're willing to accept lower prices. This is why these peaks form at a lower price than the prior peak. We call this the lower high. So the descending triangle is an illustration of aggressive sellers and complacent buyers. Just think about that. Aggressive sellers, complacent buyers. It sets the stage for the price to go lower. And then we could see here how what was support turned into resistance over here. Here's a support level that stays intact. How does support stay intact? Well, there are people who sold down here who regret their decision to do so when the market goes higher, and they tell themselves, if this ever gets back to my price, I'm going to buy my shares back. So seller's remorse can keep support intact, just like buyer's remorse can keep resistance intact. And sometimes this resistance and support can stay intact for a long time. Oh, that's one thing I wanted to point out on the S&P too. I forgot to mention is that we are getting close to that all-time high. So as we know, there tends to be resistance at former peaks. So I have a hard time thinking that this is just going to blast right through this to all-time highs. Considering the fact that some of our big stocks are really not looking that impressive. As a matter of fact, Apple is even looking weak. And these really crazy sentiment things we got going on. This is another thing too here that's a sentiment thing. This is someone was sending around on Twitter. Is this these inflows in the S&P 500 fund? So what is an inflow? Well, it just means that a bunch of really big buyers show up. So the market makers basically create new shares and sell them to these new buyers. Well, I don't know if they're new buyers, but these large buyers, and that puts money into the fund. So that's what a big inflow is here. So this isn't just big. This is like an outsized. It's like twice as much as the last biggest one. So that's another probably a screaming sentiment signal there saying, pay attention. I could be about to go lower. What time is it? All right, everyone. So if no one's got any questions, I think I'm going to hit the road. But we should be back tomorrow.
You guys have a wonderful day. We hope you make a lot of money in the market today.